So, Alex, welcome to the Chester Landlord podcast.
Thank you very much, David. It's very nice to be here.
Yeah, no, it's great to have you here. We a lot of anticipation about this episode.
No pressure.
So no pressure at all. We did a landlord seminar last week in Hull in Chester to just over 200 people, and I mentioned that you were coming on, and we had a lot of people who were very interested in hearing this episode. So no pressure at all.
That must be a first. People are interested to hear from an accountant. I've never heard that before.
I know, believe it. But a very important topic because things are changing again for landlords. You know, our seminar last week was all about the Renters' Rights Act, which is coming into force in the 1st of May. But today we're going to be talking about something that's coming even sooner than that, possibly.
Definitely.
So first of all, just for our audience, would you mind just telling us, well, who are you and what do you do? Where do you come from?
Thank you very much for that, David. Well, I'm a boring accountant, I'm afraid. I've been at it for 25 years, and one of my expertise is property and property taxes. I'm a partner at Mitchell Charlesworth, and I've been at it for far too long now that I'm afraid I can't do anything else.
You can't do anything else?
No, unfortunately not.
You sound very similar to me. I've been a letting agent for 23 years now, and I don't think I could do any other job, to be honest.
You're looking good for it, though, David.
Well, you too. So making tax digital. What is making tax digital?
Doesn't it sound really exciting, though? Making tax digital. Well, unfortunately, it's not.
Is it not?
It's not, I'm afraid.
Right.
Well, we have to think about this is coming from HMRC.
Yeah.
So one is making tax digital. It's the way in which certain individuals report all of their income, their expenditure, and their profits to HMRC. It's a massive change. For those individuals, and it's based on a certain type of individuals, they normally report all of their information, profits, income, expenditure, HMRC, annually via an annual self-assessment tax return. Under Making Tax Digital, that changes.
Okay. So will you still need to do a self-assessment tax return if you're doing Making Tax Digital? Does this replace it?
It doesn't replace it, I'm afraid. What Making Tax Digital is new quarterly returns.
Right, okay.
So it's for certain individuals, and we'll go through those individuals in a few moments' time, but it's quarterly returns, and at the end of the year, you'll still have to do, dare I say it, an annual tax return or the equivalent at the end as well.
So this is in addition to the tax return. Wow.
Additional returns.
Okay. So one of the questions, because we've had a lot of questions sent to us, is with regards to thresholds, because I believe you've got to earn over a certain amount from your rental income to actually qualify for this. Is that correct?
You do indeed. There's a certain threshold set. That is set from the 6th of April 2026, which is when Making Tax Digital comes in. So that's literally just around the corner.
Yeah.
And that threshold is called qualifying income of over £50,000.
Okay.
So if you have qualifying income over £50,000, then you are obligated to report under Making Tax Digital, which we're going to call MTD today, just for short.
MTD, okay. So £50,000. So let's say you've got a landlord who, they're employed and they have a salary of £30,000, let's say, and they've got rental income of £20,000. They would qualify then in that case?
I wish it was that easy. Sadly, it's not. The definition of qualifying income relates to two specific things. And Making Tax Digital is just about two different individuals. Those individuals being self-employed individuals and landlords. So that qualifying income is just from the sources of those two different things. So if you were a landlord with income of more than £50,000, you would automatically be brought into MTD. If you were self-employed earning £30,000 and you had rental income of another £30,000, you would also be brought in because you combine the two together.
Oh, okay. Right, so it's just for self-employed people, and that combined income is over 50.
Correct.
50K,
self-employed and landlord, both separately or put together.
So this is going to affect, because originally I suppose some landlords out there might have thought if this is just about rental income, then it's only going to affect perhaps people who've got small portfolios or large portfolios, whereas actually if you're a self-employed plumber, let's say, and you've got a couple of rental properties, this could easily...
It could easily push you over and you are pulled into this regime from the 6th of April 2026. So it's really important to calculate what is your qualifying income. Things like employment income, dividend income, bank interest, they are not deemed qualifying income. So it's literally just those two items, self-employment income and rental income. And the big thing, just to clarify here, is people often get confused between total income and profits. This is your income. So
Not
it's
profit.
Not profit. So it's very easy to suddenly exceed that £50,000 threshold. If you've got 5 properties, £1,000 rental yield a month, then you're pushed above that threshold very nicely.
Wow. Okay. So just to be clear, if someone, let's say, has an employed job, but they're a shareholder of the business and they get dividends, the dividends don't qualify for this. It is just self-employed income.
That's correct. Self-employed income, rental income.
Okay. Fair enough. So this is going to affect a lot of people in Chester, isn't it?
It's going to affect so many people, to be honest with you. And if you think it's okay, I'm not in receipt of income more than £50,000, then it's just a matter of time before it affects you.
Yeah. So something I was reading is that HMRC have a habit of introducing something and then they'll change the goalpost. So this threshold of 50,000, that's not going to stay 50,000 forever, is it?
It's not, and they've already reported on that. From next year, from the 6th of April 2027, that threshold drops down to 30,000.
Wow. Okay.
And from the year after, 6th of April 28, it drops down even lower to 20,000. So you can just imagine the amount of people that are going to be captured when you go down to £20,000 worth of income.
And then with rents rising, I mean, the average rent in Chester is about £1,300 a month. So your average landlord, who's getting that rent, if you've got a couple of properties in a few years, you are going to qualify even if you've got 2 properties, aren't you?
You are indeed. If you're over that threshold.
Or one if you're self-employed, if you've got other income. So yeah, this is really going to affect everyone. You think about how many, thousands of landlords there are in Chester and North East Wales where we cover as well. This is going to affect potentially most of our clients.
It is indeed, and that's the aim of HMRC, is to actually collect all of this information digitally from all landlords.
So what do you think HMRC's sort of idea behind this is? Is it to have one central sort of register? Will this be a mechanism for HMRC to make sure that landlords are paying the right tax? That they're not avoiding it, perhaps? Or
it is. I mean, what HMRC are trying to achieve here is to collate information digitally from individuals more frequently.
Yeah.
So instead of having once a year tax returns, they want quarterly information from you, all done digitally. Why do they want it digitally? Because it's so much easier to check, to make sure it's correct, to compare and look out for fraud and error.
So let's say I'm a landlord and I qualify for this, and let's say I get my statements off my letting agent, if I'm managed with a letting agent, or let's say I manage my own tenancy, which a lot of landlords do, and I've got, a good spreadsheet with it all on. Is it just a case of sending that, perhaps Excel spreadsheet to HMRC, or is there like a portal on HMRC where you can input all this data? Is that how it's going to work, do you think? Or?
I wish it was that easy, to be honest with you, David. Sadly,
is it not?
It's not.
Okay.
Whilst HMRC do have a portal for submitting tax returns for individuals, you do need an approved piece of software to do MTD.
Right.
And Excel is not an approved piece of software in this instance.
Are you at liberty to share some names of software?
Of course I can. There are many pieces of software out there. Some of the market leaders are called Xero, Sage, QuickBooks, Free Agent. There is even landlord-specific software that is built around MTD, built around financial reporting, but also deal with all of your other compliance information. And it's those softwares that you have to use to submit those digital quarterly returns to HMRC.
So I know there are specific landlord CRM systems which you've just touched on, which will hold things like your EPC, your gas safety, your EICR, etc. And so this is going to be in addition to those. And I wonder, actually, thinking, so our business, obviously, I'm the MD of a local agent called Cavendish, and I wonder whether letting agents' CRM systems will actually add this on as addition. We've not heard from our CRM system personally, I don't think yet.
There are a number of CRM systems that have added on the financial elements to their package.
Surely they must.
And are now using it for MTD or looking to use it for MTD. For any of your landlords listening today, what I would say to them is have a look at the packages, see which one is right for you.
Yeah.
And see which one you want to use. Do you want to use it just for that financial reporting, or do you want to use it to help you manage your portfolio?
So if you were, let's say, going to use one of these CRM systems, let's say Xero, let's say, for example, if you were just going to use that for MTD, do you know what sort of costs landlords would have to pay?
Of course, these things aren't overly expensive, to be honest. They start at around about £30 a month for basic bookkeeping software that's MTD compliant. Obviously, the more detailed, the more complicated, the bigger the package, the more things you want from it, the cost will naturally increase.
So let's say if you're on a basic, let's say you're just over the threshold and you sign up with one of these systems like, Xero, let's say, for argument's sake, and it's £30 a month. So, £360 a year, let's say, at least, just to report it. But then if you got to pay, are there any other costs involved with doing this, or is it?
Well, there can be, and it all depends on how comfortable the landlords are with their own financial reporting. If they're very comfortable reporting and submitting things to HMRC, i.e. they've done their own tax return for many, many years, or they're comfortable doing things like VAT returns, then naturally they can do their own bookkeeping and do their own submissions. If they're not, then obviously they'll need to engage someone like an accountant to do so, whether that be just reviewing their financial records or whether that be preparing and then submitting it. Is there a cost of doing so? Of course there is. That cost will all depend on the size of the landlord, how much information, how many transactions.
Yeah.
But even for a small landlord, we're talking a few £100s a quarter. So it's not insignificant sums of money here we're talking about.
No, so I was going to say, is this surely this is a service that you're going to offer, or you are starting to offer your landlord clients?
We are, and every landlord is different, and the way that they deal with their affairs are very, very differently. Some landlords, obviously, they want us to take the pressure off them. They understand that these are documents that are being submitted to HMRC. They want to make sure it's right. They also know that tax surrounding property is getting more and more complicated every single year.
Yeah.
They're not comfortable and they engage a professional to do so, like myself. Other ones actually are more than happy to do it, and we just support them in doing so.
And then obviously they'll have to do, coming back to this, they'll then have to do the annual tax return as well. So surely there'll be, I imagine you've got a service where you'll manage the MTD for them, and then, that'll probably link to the annual tax return service as well. So if a landlord wanted a hands-off approach and just went, do you know what? I don't want this on my desk. Is this something you could just oversee the whole thing?
Yeah, and that's something we do every single day of the week with normal businesses, not just landlords. It's just that landlords are now being brought into that regime, very much like normal businesses that do VAT returns each quarter.
Yeah. So I was going to say, yes, it's something I'm very passionate on is sort of helping landlords adopt a business owner mindset, because I think a lot of landlords, they just see themselves as a landlord who has a property, and they don't think like a business owner. And I think landlords who perhaps adopt this business owner mindset, which a lot of newer portfolio landlords have, they very much see themselves as like the CEO of their property business. And what these people tend to do is have like a bit of a corny phrase, I guess, but a power team around them where they don't manage their own accounts. They have an accountant who does that. They don't manage their own property. They'll leave that to a letting agent. They don't do their own maintenance. They have a maintenance team, and they very much, they're not on the tools in their business. They're running the business, and so they can spend their time growing, the portfolio. So I could see this being a very attractive option for those type of landlords who just don't want to be dealing with their own tax return and making tax digital. They can just give it to someone like you.
Well, the sector's become so complicated that actually you need all those experts around you.
Yeah.
You do need your landlord to understand that they can't do everything themselves, I'm afraid. It just got so complicated. There's so many different rule changes coming in, whether that be from your side, from the compliance side, whether that be from the tax side. And as a result, what they should be thinking about is they are at the core, and every one of their professionals are just surrounding them, trying to help them through all of the challenges that are being forced upon them from the regulatory side of things.
Yeah. Okay. So obviously we're recording this middle of March, so we're literally only about 3 weeks away from when this all starts. So if I'm a landlord and I think I might qualify, what do I need to do next month? Do I have to submit something next month when it comes in, or?
So you've got quarterly returns. The first quarter will run to the 5th of July.
Okay.
So that's the 5th of July 2026. The deadline for that submission is almost a month. And I say almost a month. It's by the 7th of the month following. So the 7th of August is the first deadline. So you need to be ready for that quarter and that deadline. How do you get ready? Well, the first thing you need to do is to see whether you do have that qualifying income above £50,000 or not.
Yeah.
And whether you're going to have qualifying income above the thresholds in a year's time or 2 years' time. That's stage one. Stage two is decide on how you're going to manage all of your record keeping. Do I need a bookkeeping package? What is that package? What do I want to pay? What do I want it to do for me?
Yeah.
Then what you have to do is actually register with HMRC. You have to register for MTD with HMRC using the gov.uk site.
Yeah.
And you can do so with your gateway account or with your one login account. And what you're doing there is registering for HMRC, registering for MTD with HMRC, and then linking your software. Once you've done all of that, then you're almost ready to go for MTD.
Okay. And with so HMRC, if people are late with their tax returns, there's a fine, isn't there? Have they announced what fines landlords might get for late submissions?
They have indeed. This is HMRC. They love their fines and penalties. It's not too bad, to be honest with you.
Okay, good.
What we have to
Some
acknowledge, what we have to acknowledge is this is a soft launch of MTD,
sure.
to be honest with you. So they're using what they call a penalty regime, very much like the VAT system has a penalty regime. If you're used to doing the VAT system, that means you can have 4 penalty points before there is a penalty issued. Every time you're late with a submission, you get 1 penalty point. So if you're late with your 4 submissions, upon your 5th one, you'll get a £200 fine. And for every late submission thereafter, you will have a £200 fine. Those penalty points will only drop off once you've actually submitted the next 4 quarters on time, plus any late returns that you may not have previously submitted. So it's not too bad.
No, okay. So that, to me, that sounds like they're taking the approach. They'd rather people be compliant. They want people to be compliant rather than going after them and finding them and making examples of them straight away. I'm sure that might change in the future. But
I'm certain it will probably change in the future, to be honest with you, David. What I think will happen is people get used to the system. As people are used to the system, what you might find is the penalties start to increase. And we might have a change in the penalty regime, and that £200 may increase or may become a little bit harsher.
Yeah, sure. No, okay. So are there any questions perhaps that I haven't asked you that I should have asked you? Is there anything else that we need to know about MTD? And I guess a follow-on question would be, would you be able to quickly give us a summary of everything as well?
I think you've asked a lot of questions there, David, which is good. And I hope I've managed to answer all of them.
I've certainly learned something.
All of them here.
Thank you.
What we have to realise is this is the biggest change from HMRC in over 30 years, really.
Yeah.
They are trying to digitise the system. I'm often asked, why are they doing so? And is it all about collecting of data? Of course, it's about collecting data. Why do I personally believe they are doing so? Well, HMRC have intimated in the past that they wish to be a bit more like a utility company.
Really? Utility company?
A utility company. What do I mean when I say that? The reality is, what do we do with our electricity? We give them a meter reading and they adjust our direct debit accordingly.
Ah, right.
So what we're doing with HMRC here is we're giving them more information on a quarterly basis so that they can calculate what our tax should be. I'm sure there is the writing on the wall here somewhere. Whilst we currently pay our taxes on the 31st of January each year for all of the profits on these types of income, and in July if we make payments on account, going forward, can I see that changing? Yes, this is a massive step towards that change. It's a massive step towards being that utility company which they so seem to desire to become.
And then I guess a gentle plug for our services and your services is that if they perhaps had an agent that collected the rent for them and they use an accountant, it's a bit like having a smart meter. You don't need to worry about it. Is that?
Of course, and that's what we're here to do, is to relieve the pressure so that the landlords can do what they should be doing.
Which is looking after the portfolio, growing it, and actually not working in their business. And because from our seminar last week, I spoke to a few landlords afterwards, and a lot of landlords identify as they feel like they've got another job at the moment because there's if they're self-managing a portfolio of 10 properties, let's say, and they've got their own job, they feel like they've got a second full-time job because there's just so much to do, if you're running around doing everything. So I think I would certainly use someone like yourself just to take this off my plate, because I just think landlords have got enough to deal with, I think, at the moment, with big changes to compliance coming through in the next couple of months. This is another thing.
It is.
Which almost isn't being spoken about enough, I don't think, because the Renters' Rights Act has sort of taken centre stage, which it should do, but a lot of people don't appreciate this is happening in a few weeks. Renters' rights, we've still got another 6 weeks to go. Exactly.
And unfortunately, it's a sector that's under so much pressure at the moment. It's hard in the property sector to run a business, to make money from it. And the compliance is making that harder. And this is just something else that landlords have to do. There's no getting out of this, I'm afraid.
No.
You do have to do it. It is compliance. So you just have to make sure that you are compliant and find the time to do so. And that time might be by engaging somebody like yourself or myself.
Yeah.
Or it might be that actually you're comfortable doing it, but you need to make that decision.
Well, okay. So final thought from me with regards, obviously we've got you on the podcast today, and something that quite a lot of landlords ask us is, should I be having should I own my property in my own personal name or on a company name? And a lot of people, they're asking this because they're thinking of exiting. So rather than go down the rabbit hole today and talk about it in detail, is that something you advise on? Is that something you're...
It is indeed, and it's a brilliant question, to be honest. I'm always asked. The answer, I would be here all day talking about, to be honest with you. So it's one for another podcast if you want one.
Yeah, but I was going to ask, would you be happy to come back and talk all about that? Because I mean,
I'm more than happy to do
hot
that.
topic.
And I think the audience would be quite surprised in some of the findings. Whilst a lot of people think
it's
that...
It's a cliffhanger, isn't it?
It is indeed.
Because everyone says to me, well, you want to have it in a company name, but I know we had a chat off camera before, didn't we? And you said not necessarily. So I'm intrigued to have that conversation.
And it is that, because it's about goals and objectives. And if I do come back and we have another podcast on this, I think you'll be surprised. I may give some examples where actually it's not beneficial to have properties in a company, and it may be beneficial to keep them aside personally. But it all depends. It really does depend.
Yeah, no, great. No, well, that's why we had you on. So yeah, no, Alex, take this as your invitation. We would love you to come back and talk all about that. And once again, thank you for coming on today.
Thank you very much, David. I hope the audience learned something new.
I'm sure they will. Thank you very much.